I've seen that the tobacco companies in my portfolio, specifically British American Tobacco, Imperial, and Scandinavian Tobacco Group to a lesser extent, have done extremely well this year. And I was wondering what was going on and how the valuations of tobacco companies look. So I put together a quick screen, selected price index 1 month, and selected the full range. And then I selected most developed countries and, of course, just the tobacco sector. And then I ran the screen, and this is what it came up with. And if I just look at the last 6 months, Smoor International, a company that I don't know, is up 91%. Philip Morris is up 52%. British American 31%. Turning Point, which I don't follow, is 27%, and Imperial's up 19%. This is an outstanding performance if you consider that these companies are all paying high dividends around 8, 9% even 10% before the price increase. So let's look at the valuations. First of all, dividend yield. What one is the highest dividend yield? Yeah, Scandinavian Tobacco Company. They are struggling a little bit. They're implementing a new ERM system. Profitability and sales, I think, are going to drop. Also, tariff have hit them a little bit for their expensive cigar imports into the US. So you can see their dividend yield is extremely high. Altria has also got a really high one. I don't think Altria has done, well, not bad, up 18% so far. British American is still there, and Universal is also up there along with Imperial Brands. If you look at shareholder yield, that is buybacks plus dividend yield, you'll see that highest is Scandinavian. They bought back a lot of stock in the last year, so their shareholder yield is extremely high. Then Korea is up second. They must have done a lot of buybacks because their dividend yield is quite low. Then Altria. And if you look at shareholder yield, we call it Mabay in favor because it includes debt. So in other words, it's dividend yield plus buybacks plus debt repaid. The highest one is British American. Imperial's got a high shareholder yield as well, and then Altria as well. Then, of course, nobody's going to pay dividends if they don't have free cash flow. So let's look at the highest free cash flow yields. There's Universal Corporation. They have the highest free cash flow yield. That is cash from operations minus capital expenditure divided by enterprise value, just to refresh you there on what that ratio means. Second one is Scandinavia, and then the RLX Group is the third highest. Then Imperial and British American, so they're all in there as well. And the Altria seems to be a little bit weaker. Then we've got a composite value indicator that uses 5 ratios, I think. Yes, price to sales, price to earnings, EBITDA yield, which is EBITDA to enterprise value, free cash flow yield, and shareholder yield. And it calculates the best company based on those 4 ratios. All the companies are ranked on those 5 ratios. These rankings are then added together, and the company that scores best gets the lowest ranking. So let's have a look and see which of these companies have the best ranking. Altria's got the best ranking. In spite of the nice increase, it's got the highest or the lowest valuation on all 5 of those ratios. British American is second, and then RLX. Funny that Scandinavian is not there, and Imperial is also quite a bit more expensive. As you can see, all these companies are quite undervalued, all in the top 20% of all the companies in the screener. That's the 22,000 developed market companies we have in the screener in total. And the one with the biggest price increase, as I said, is Smoor, then Philip Morris, then British American over the past 6 months. And if you're looking for companies with a smooth upward sloping stock price, then you want to look at adjusted slope. You can get the definitions in our glossary always. Just sorted by high to low. Philip Morris has got the highest smooth upward momentum, and then Smoor in China, and then Turning Point, and then Imperial Brands, funny enough, and Altria, and then British American. So that gives you a short summary. As you can see, still a good dividend yield to be had on these, and they've got great momentum and they're moving up nicely.